Does what Jay Powell said yesterday change in any way how you see today?
No, he was wonderfully boring yesterday. We've been waiting for a boring Jay Powell for the better part of a year and a half. You know, what the Fed has done has really been remarkable in the second half of this year in terms of the market thought that we were headed for a recession and we needed rate cuts until zero. The Fed was able to pivot, deliver some stimulus, but then also simultaneously convince the market that it really didn't need any more. And so now as we sit, the economy looks like it's stabilized, maybe reaccelerating, and the market's okay with the Fed not doing anything for a while. And he just needs to do that.
How are you positioning then for a Fed in a wait and watch mode through 2020?
We've taken them off the table, and that's the key thing. We're able to focus instead, rather than worrying about the Fed being overly aggressive or trying to manage market expectations, we're focused on the fact that earnings growth looks like it's going to reaccelerate, growth is stable, and we think the bull market continues.
I was going to finish your sentence for you. Instead of worrying about the Fed, you're worried about trade?
I don't know if I'm worried about trade. I mean, I think what we're looking for on trade, what we're hopeful on trade, is that it doesn't get any worse. I don't need it to get better. I just really don't want it to get worse.
What would worse look like to you?
Look, if we wake up on Monday and it turns out that we've gone forward with these tariffs and the rhetoric is heated up, well, then I have to have some that represents a risk to next year's earnings numbers. If it turns out that I even get like a temporary delay in December, you know, that's probably good enough for now.
There's some reporting that Peter Navarro seems to be moving back into more hawkish territory, that he's going to go in the meeting today with President Trump and press for a firm hand, you know, more the stick than the carrot. Do you think he's likely to get his way?
Trying to predict how the president is going to listen to his advisors and make a decision, it's something we've all tried to do at one point or another in this administration and then gotten egg on our face. Let's just see what the day brings.
We know that at 7:45, we're expecting the results of the ECB meeting. Mm-hmm. We're going to hear from Christine Lagarde. There's been some speculation, because she's been more of a talker than her predecessor, that she might give more hints and more direction for the European economy and therefore the global economy. What are you expecting to hear from her?
Yeah, so I think in terms of rates and actual monetary policy, you know, if this meeting goes well, it'll be a kind of mirror of yesterday where it's boring. I do think, however, that everyone's going to want to understand what's she doing with the strategic review, and are there any insights that she's going to start to kind of let trickle out. That's going to be the focus for us, and then just getting a sense of her communication style.
And then on trade, do you think that we're going to see movement toward more reconciliation between Europe and the United States? Between
Europe and the United States. Look, I think where we're headed in terms of trade is, I don't think the president is looking to really ratchet things up in terms of a new front over the course of the election year. I think he'll put pressure where need be. I think certainly this financial services tax is an area he wants to push back against, and I think he'll do that if he needs to. I would expect to see him to be more aggressive post a re-election, if that happens, than necessarily over the next 12 months.
I got to ask you, we have the articles of impeachment in the House. Mm-hmm. This is expected to have a vote and to move on to the Senate. Does this in any way inform how you see 2020, the back and forth that we're seeing on Capitol Hill?
No. And the reason why is impeachment has not exited the realm of politics to get into policy. It becomes policy for the market to deal with if there's any chance that the president can be removed. And there's no sense that that's the case. So right now, what this really is opening salvos in the 2020 campaign. There's a lot of shoes to be worn out between here and November.
All right, I want to get your picks for 2020, but before we get there, back to the Fed for a minute, which is where we started the conversation. One of the big wait and watch for investors was to see what Jerome Powell would say about the repo market and about liquidity. Are you expecting some pressures for the end of the year regulations?
I think you could see some pressure in the repo market by the end of the year, just because it's another one of those kind of tax-paying liquidity events, and it's not like deficits are going away, so you're going to have those the demand. So I think those dynamics are in place, but what we're expecting is more of the same until we get a permanent facility next year.
Okay, one pick for a stock. What are you looking at today?
Well, not necessarily in terms of stocks, but we think for 2020, small caps are the consensus or the non-consensus play.